China's March currency reserves shot up to the highest level in 4 months. This as more investors bet on China's currency appreciating. Dr. Nicholas Lardy is a China expert with the Peterson Institute for International Economics, and he joins us from Washington. Nick, we want to welcome you back to Bloomberg. Thanks for your time this morning. Let's balance out what we heard this morning on foreign exchange reserves from China with what we got over the weekend from China, which was that we had a trade deficit there, which caught some people off guard and raised questions about whether the currency has to appreciate. What is the big takeaway from this data and the currency story?
Well, I think that the takeaway is most of the reserve buildup is probably explained by action on the capital account, a lot of money moving into China on the expectation of appreciation. So for the first quarter, the increase due to the trade surplus is extremely small, something in the neighborhood of $15 billion, which is absolutely minuscule compared to the trade surpluses we've seen growing over the last few years. So the buildup of the reserves is primarily on the capital account transactions and probably primarily what the Chinese sometimes call hot money, moving into China to take advantage of a likely appreciation of the currency.
So there is this expectation then, as you said, that we are going to see an appreciation of the currency. In Washington today, Bloomberg's Hans Nickel following the meeting between President Obama and Jintao, but you don't expect that we'll see any developments on that front today.
I would be very surprised if it was announced while President Hu was in Washington. I think it might easily be announced sometime after he leaves and before the strategic and economic dialogue takes place between China and the United States in Beijing in the latter part of May 24th, 25th.
So that gives us a little bit of a time idea. And what about how the Chinese government does this? I mean, could they not do it with the issuance of debt as well? Isn't that one of the ways that some people have talked about them doing this?
Well, I think what's likely to happen is that they'll intervene a little bit less in the currency market and allow their currency to appreciate fairly modestly. They'll probably widen the trading band slightly, and we might see an appreciation of, say, 3 or 4% over the course of the balance of the calendar year.
And what about the overall China story? Because we also got some news today on loan growth in that country in the month of March. We continue to see a slowdown in the loan growth story. You have to wonder what that means for all sorts of things like commodities, which obviously we know China has been gobbling up in recent months.
Well, I think what the numbers show is really the authorities, the monetary authorities, are very determined to bring the growth of credit and broad money down to the target that they have specified for the year, which would still be fairly robust. Be overall broad money growth of about 18% for the year as a whole. Last year it was 30%, which they clearly believe is not sustainable, would lead to inflation and cause a lot of disruption. So I think it's a good sign that they're getting that down to a more sustainable level.
Just in a word, very quickly, what is it on what China will do that you think will be most appreciated by, say, officials and companies perhaps here in the U.S.?
Well, there are some issues, some trade issues outstanding, what the Chinese call indigenous innovation, which gives preference to domestic manufacturers and government procurement. So certainly some reform in that would be highly welcome. And I think for those that are facing competition from imports, currency is the #1 issue. China has gone back to this rigid peg to the dollar since the summer of 2008, and Chinese goods have gained substantially in competitiveness in the U.S. market over this period.
All right, Nicholas, thanks so much for your time.